In this video, we're going to see how to enter investment income, such as dividends and interest income, and investment expenses within UFile. Typically, investment income such as dividends and interest are declared on the T5 slip, and in certain instances, the T3 slip. Let's have a look at how to add those two slips. In the interview screen, click on the Interview Setup section of the left-hand navigator. On the page to the right, tick the box next to Interest, Investment Income, and Carrying Charges within the Investment Income and Expenses section. Click Next at the bottom of the page. A new section will appear in the left-hand navigator. Interest, Investment Income, and Carrying Charges. Click on that section. On the page to the right, you have several options you can choose from. Let's start with a T5 slip, which is the typical example. As a first step, enter the name of the financial institution that has issued the T5 slip to you. The name of this financial institution will appear in your left-hand navigator in order to better organize the slips that you receive. Now let's enter dividends from Canadian corporations. The actual amount of dividends received from Canadian corporations will be indicated in either boxes 24 or 10 or both, depending on the types of dividends you have received. Eligible dividends are entered in box 24, while other than eligible dividends are entered in box 10. Enter the amount as shown on your slip. If you are a resident of Quebec, you need to also enter that same amount in the equivalent Quebec box. There is no need to enter the taxable amount of the dividends received and the dividend tax credit of the dividends received from the slip. UFile will compute these amounts automatically for you when you calculate the tax return. Now let's enter interest income from Canadian sources. Interest income is indicated in box 13 of the T5 slip. Simply enter the amount as shown on your slip. The example we just saw is for Canadian dividend income, meaning dividend income from Canadian corporations, and interest income from Canadian sources from a taxable account. Dividend income and interest income gained from a registered account, like an RRSP or a TFSA, would not be indicated in any tax slip. The reason for this is because the income is gained within a tax-sheltered account. As long as the income stays within that account, it is not taxable and therefore not declared on a tax slip. Now let's have a look at foreign-sourced investment income, such as dividend income and interest income from a Canadian account, be it a Canadian investment account or a Canadian brokerage account. This income must be entered separately in its own T5 slip. So we go back to the interest, investment income, and carrying charges section, and now we add another T5 slip on the page to the right. Foreign-sourced investment income from a Canadian account will also be indicated on its own T5 slip. As a first step, indicate the name of the financial institution that has issued this slip. Next, indicate the exchange rate that is applicable for that foreign sourced income. As an example, we provide the annual exchange rate for the US within the slip. Enter the exchange rate. Foreign sourced income will be indicated in boxes 15 and 16 of the T5 slip. You must indicate whether it is dividend income or interest income. In our example, we'll try dividend income. Next, indicate the foreign tax that was paid on that foreign investment income. Now you must specify the country of origin of the foreign income. Choose the appropriate country. If the foreign sourced income comes from several countries, you must add a T5 slip per country. This is important for the purposes of the foreign tax credit that you might be eligible to for this foreign sourced income. The foreign tax credit is calculated on a country by country basis. Therefore, you must have a T5 slip for each individual country where you received this foreign source income. Now let's have a look at the T3 slip entry. Go back to Interest, Investment Income, and Carrying Charges section on the left-hand menu. And on the page to the right, click on the plus sign next to T3 Trust Income. Enter the name of the issuer of the T3 slip. In either boxes 49, 23, or both, indicate the amount of dividends that were received from this issuer. For residents of Quebec, you must repeat this entry for the Quebec box number as well. Just like the T5 slip, there is no need to enter the taxable amount or the dividend tax credit from the slip. UFile will compute these amounts automatically on the tax return. Interest income from a T3 slip would usually be indicated in box 26 of the T3 slip. Simply enter the amount as shown from the slip. If you received foreign sourced income that does not come from a Canadian investment account, and you received a foreign tax slip for this income amount with taxes paid to the foreign country, you will need to add the foreign income section within UFile. To do so, return to the Interview Setup section on the left-hand navigator. On the page to the right, within the Investment Income and Expenses section, tick the box next to Foreign Income or Foreign Property. Click Next at the bottom of the page. A new section will appear in your left-hand navigator, Foreign Income and Property. Click on that section, and on the page to the right, choose the relevant option, either income from foreign dividends or foreign interest income. For this example, we'll try dividends. Choose the country of origin of the foreign sourced investment income. Enter description of the foreign sourced income. Enter the relevant exchange rate. And then enter the foreign income received and the amount of foreign tax that was paid for that foreign sourced income. Click Next at the bottom of the page. Now let's have a look at how to enter investment expenses within UFile. To enter investment expenses, go back to the Interest, Investment Income, and Carrying Charges section within your left-hand navigator. On the page to the right, click on the plus sign next to Carrying Charges or Interest Expenses. In Interest Expenses, enter any interest you have paid on any investment loan used to gain investment income. In Carrying Charges, enter any management or accounting fees that were charged in order to manage your investment accounts. Remember that the amounts that you are entering for investment expenses are related to your taxable accounts. You cannot deduct any management fees or any interest expenses on an investment loan if the account was a registered account, such as an RSP account or a TFSA account, because the income in that case gained within those accounts are tax sheltered. Click Next at the bottom of the page. Thank you for choosing UFile.